Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be solving now one question where all partners of partnership firm have become insolvent. When there are three partners, if any one partner become insolvent, his deficiency is shared by the other two partners. Out of three, if two become insolvent, deficiency of insolvent partner is shared by third solvent partner. But if all partner becomes insolvent, what to do with the deficiency? Let us understand in this question. Let us go through the question. Kishore, Abhay, Vinod were partners sharing profits and losses in the ratio of 2/5, 2/5 and 1/5. That is, ratio is 2:1. They decided to dissolve the firm on 30th April when their position was as under. Balance sheet as on 30th April 2012. Now when all partners are become insolvent, accounting procedure will be a bit different. We open realization account where we transfer all assets, but all liabilities are not transferred to realization account. For liabilities, we open separate accounts. Let us go through the assets. Building, realization account debit. Machinery, realization account debit. Stock, realization account debit. Debtors, realization account debit. Bank, this account will be separately opened where opening balance will be recorded on debit side to balance brought down 11,000. Profit and loss account, this is loss. Is shown on asset side, that is, it is having debit balance. It's a loss of 9,000 which will be divided among partners in their profit sharing ratio, that is 2:2:1. 3,600, 3,600 and 1,800. Kishore 3,600, Abhay 3,600, Vinod 1,800. This will be transferred to the debit of their capital accounts. Let us move to liabilities. Capital account of Kishore, Abhay, Vinod. Capital account credit. Creditors, separate account will be opened. On credit side of this account will be showing opening balance by balance brought down 50,000. Bills payable, separate account will be opened where credit side will be writing by balance brought down 20,000. Firm has got two liabilities, creditors and bills payable, 50,000 and 20,000. If we see the ratio of these liabilities, it is 5:2. Why this ratio is required to be considered? Whatever amount firm have to settle the liabilities will not be sufficient to pay entire liabilities. Therefore, liabilities will be settled proportionately with available cash. Therefore, this ratio will be used, 5:2. The firm was dissolved on the above date and the following results of realization were as under. The assets realized as under: building 10,300, 1. Machinery 17,500, 2. Stock 4,200, 3. Debtors 9,700, 4. 4 assets are sold, cash will be received, so cash bank account will be debited and realization account will be credited. Realization expenses amounted to 1,700. Bank account credit, realization account debit. All partners were declared insolvent. The recovery from their private estate was as follows. Kishore 2000, Abhay 3000, and in case of Vinod, it's nil. So amount received from Kishore, Abhay, it will be credited to their respective capital accounts and bank account will be debited. Kishore and Abhay capital accounts will be credited and bank account will be debited for this amount of 2000 and 3000. Prepare necessary ledger accounts to close the books of the firm. In this problem, we are required to open a realization account, partners capital account, cash bank account, creditors account, bills payable account. Along with that, we'll be opening one new account called deficiency account. This account is not open when one partner was insolvent in certain problems which we have solved. When all partners are insolvent, this account is to be open called as deficiencies account. This account is required to be tallied so that we can understand we have done our entire question correctly. Let us open ledgers. Let us start solving the problem. First step is transfer step. Here we are required to transfer all assets and liabilities to realization account. When in a problem we have information that all partners have become insolvent, we should transfer only assets and not liabilities to realization account. Let us start with asset side. Building, machinery, stock, debtors, these four assets at book value will be transferring to realization account. Realization account debit side, to sundry assets, building, machinery, stock, debtors. Total book value transferred is 75,000. Bank account 11,000. This will be transferred to the debit of bank account. Cash bank account debit, to balance brought down 11,000. Profit and loss account, this is a loss 9,000. This will be transferred to partners capital account. On debit side, in profit sharing ratio, that is 3,600, 3,600 and 1,800 between Kishore, Abhay and Vinod. Partners capital account debit to profit and loss account. Kishore 3,600, Abhay 3,600, Vinod 1,800. Let us move to liability side. Partners capital account. Kishore 9,800, Abhay 9,100, Vinod 6,100. This will be transferred to the credit of partners capital account. Partners capital account credit by balance brought down. Kishore 9,800, Abhay 9,100, Vinod 6,100. Creditors will be transferred to creditors account. Bills payable will be transferred to bills payable account, which are separately opened. Creditors account credit side buy balance brought down 50,000. Bills payable account credit side buy balance brought down 20,000. We have transferred all the items from balance sheet to respective accounts. We'll move to now adjustments, recording, realization of assets. The firm was dissolved on above date and the following results of realizations were as under. Assets realized as under: building 10,300, machinery 17,500, stock 4,200 and debtors 9,700. Amount is received, so bank account will be debited and realization account will be credited. Cash bank account debit side to realization account: building, machinery, stock, debtors. Total amount realized 41,700. Realization account credit side by cash bank: building, machinery, stock, debtors. Total amount realized 41,700. Realization expenses amounted to 1,700. Amount paid, so realization account will be debited and bank account will be credited. Realization account debit to cash bank 1,700 for realization expenses paid. Cash bank account credit by realization expenses paid. Amount is 1,700. Third adjustment: all partners were declared insolvent. The recovery from their private estate was as follows: Kishore 2,000, Abhay 3,000, Vinod nil. Amount received from Kishore and Abhay will be recorded to the debit of cash bank account. Cash bank account debit side to Kishore's capital account 2,000, amount recovered from private estate. To Abhay's capital account 3,000 for amount recovered from private estate. Partners capital account credit. Kishore by cash bank 2000. Abhay by cash bank 3000. This is for amount recovered from private estate. With this we have recorded all adjustments. Now we are required to proceed for closing the ledger accounts, and we are required to find out how to settle creditors and bills payable. First we are required to close realization account. Realization account is closed. Debit side is heavy 76,700. Therefore balancing figure we are getting on credit side 35,000. This amount will be divided among partners in their profit sharing ratio 2:2:1. Thus 35,000 is divided. Kishore 14,000, Abhay 14,000, Vinod 7,000. This will be transferred to their respective capital account. Partners capital account debit to realization account. Loss transferred. Kishore 14,000, Abhay 14,000, Vinod 7,000. Next step is we are required to find out how much amount of cash we are having now, which we can use to settle creditors and bills payable. For that purpose we are required to check debit and credit total of cash bank account. Cash bank account debit side is 57,700. Credit side is 1,700. So difference is 56,000. That is cash available to pay creditors and bills payable. This amount will not be sufficient to pay creditors and bills payable because creditors are 50,000 and bills payable 20,000. On liability side we have creditors 50,000, bills payable 20,000. Total amount is 70,000. So cash is not sufficient to pay both these liabilities, as all partners have already become insolvent, and whatever possible amount we have recovered from their private estate, now nothing can be recovered from the partners. So creditors and bills payable cannot be settled fully. Whatever possible amount is we are going to pay, that will be with this available cash balance. Here ratio of creditors and bills payable is 5:2. So in this proportion available cash will be distributed. Balance amount which is unpaid will be transferred to deficiencies account. Let us understand this working note. Available cash balance to pay creditors and bills payable. We have discussed debit minus credit, it is 56,000. This is the only amount available to pay creditors of 50,000 and bills payable of 20,000. Total amount is 70,000, which cannot be settled with this 56,000. Ratio of liabilities 5:2. So amount paid to creditors will be 56,000 available cash multiplied by 5:7. That is 40,000. Out of 50,000, We are paying only 40,000. So deficiency amount is 10,000. This will be transferred to deficiencies account. Same in case of bills payable. Amount of cash available 56,000 multiplied by 2 by 7. That is cash paid will be 16,000. Out of total 20,000, cash paid 16,000. Balance 4,000 is unpaid. That will be transferred to deficiencies account. Let us understand journal entry. For payment to creditors, creditors account debit 50,000 book value. Amount paid to bank 40,000. Amount remain unpaid to deficiencies account 10,000. In case of bills payable account debit 20,000 to bank for amount paid 16,000. Amount remaining unpaid to deficiencies account 4,000. Creditors account debit side to bank 40,000 for amount paid to deficiencies account for amount remaining unpaid. You can consider this as a balancing figure of creditors account. This will be transferred in turn to the credit of deficiencies account. By creditors account, amount paid 40,000. This will be recorded in cash bank account, credit side. By creditors, for amount paid 40,000. Bills payable account debit side to bank 16,000 for amount paid. Amount remaining unpaid transfer to deficiencies account 4,000. This can be balancing figure of bills payable account. This 4,000 will be transferred to deficiencies account, credit side. By bills payable account 4,000. Amount paid 16,000 will be credited to cash bank account. Cash bank account credit side by bills payable account for amount paid 16,000. At this moment, cash bank account gets closed. $57,700 cash bank account got closed. Now we'll be closing next partners capital account. Partners' capital accounts are closed. Kishore, Abhay, Vinod. Debit is heavier, therefore we are getting balancing figure on credit side. These balances will be transferred to deficiencies account. Kishore 5,800, Abhay 5,500, Vinod 2,700. Balance of partners capital account transferred to deficiencies account on debit side to capital of Kishore, Abhay, Vinod 5,800, 5,500, 2,700. Now finally we'll be closing deficiencies account. Total of debit 14,000. Total of credit is also 14,000. Finally deficiencies account has got tallied. It means we have correctly solved the problem. When all partners becomes insolvent, deficiency account should be tally. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.